Okay, good morning everyone for coming on board and registering for this Road to Recovery sponsored by ScotPac and SME Growth Services. Thank you for coming on board. Good morning, Don. How are you?
Good morning, Richard. How are you?
Good, thank you. So I would like to take this opportunity to introduce Don Robertson. He's the Managing Director of SME Growth Services. Don has worked with ScotPac and some of our clients since 1996. He's an experience in mergers and acquisitions, restructuring businesses, assisting businesses facing fast growth, or finding ways to cut costs. Don will also work alongside business owners, board members, insolvency practitioners, accountants and brokers. He's not here to take your client away from you as a broker or advisor, but he's here to be another pair of eyes to look after their challenges and their customers' challenges, to find ways to find the right solution, such as being a business coach. So Don now will explain what is working capital is essential to growth. So over to you, Don.
Yeah, thank you for that, Richard, and good morning, everyone. Welcome. So I guess with what we do, we're not involved in financing. What we do is specialise in transforming and growing businesses and providing the support services they need. So the point is that we need each other. We need ScotPac to work with our clients as they grow, and even during the transformation process at times as well. So most businesses have a negative cash flow cycle. Their debtors, for example, your debtors typically, if you're paid in 45 days, end of month plus 45 instead of 30, and you provide services or goods on the first of the month, you've got 75 days, 2.5 months to fund. So if you're a wholesaler or importer, then you have 30 to 90 days you have to pay for goods before arrival in your warehouse. You've got perhaps another 90 days in your warehouse. There's another 3 months, and then you've still got your debtors of say 75 days. So you've got between 6 and 9 months negative cash flow cycle when you start paying out to the time you receive payment from your clients. So this comes down to sources of funding. You can either fund that by retained profits, but if you're going to fund just from retained profits on the basis you are generating the profits, it's going to retard your growth, because there's a limit to how much you can grow your retained profits to fund rapid growth. You can look at real estate security. That's very common, and often it's personal real estate security that's provided. We happen to prefer to avoid using personal real estate security. If it's in the business, that's a different story. So really it comes down to, number one, financing the debtors, which is very, very scalable very quickly. And this is obviously where ScotPac comes in. In addition to the debtor finance, asset finance for plant and equipment, trade finance so far as supporting the importing of goods. And an interesting thing that some may not be aware of is also funding bank guarantees instead of putting up real estate security or even putting up other cash. So we need each other.
Thanks for that, Don. and ScotPac, as you know, we can go to the next slide. ScotPac have scalable funding solutions, so we can assist customers at businesses anywhere from a facility of $10,000 for a single invoice up to $150 million for generally our larger companies. So often they're public listed companies or private unlisted companies. We are the leading non-bank cash flow financier in the country. We have well over 1,500 customers, and our funding lines are up to $2.5 billion at any time. Our decisions are made locally. We don't go to regional areas or to head offices in different countries. They're all done locally in each state. So we have a general manager with a DRA, and we have our head office here in Sydney that approved deals over $5 to $10 million or more. But all the decisions are made locally, all on the same floor. We're a finance partner that you can rely on. We've been in business for 30 years or more. Many companies know who we are. We've been doing some very, very flexible deals with clients, very strategic deals where we do, as you said earlier, Don, multiple different types of products. It's not just a one product company with multiple solutions. We've got offices international. We've got 250 staff across offices in Brisbane, Sydney, Melbourne, Brisbane, Adelaide, Auckland, and Guangzhou, China. And our products have been award-winning products. Now I'm going to introduce Don again to talk about what SME Growth Services offers to its clients.
Okay, just waiting for the slide. There we are. So SME Growth Services, basically, we're passionate about SME businesses. SME business for us is up to about $75 million. We strategically implement transformational business support for management and provide also other support services for clients. So really there's, as you can see, there's 5 components. I guess we've started come from the business turnaround background where we transform, turn around businesses that are in financial distress, usually extreme financial distress, underperforming or not fulfilling their potential. So it's whole of business, marketing, sales, operations, and financial. But we've built the other services that you can see on the screen to support that work. And so we're really focused on these days on turnaround, but then following it with growth or taking parts of the process. If a business is in a good, strong position, but they're not growing, we have services specifically so far as growing businesses. We also have a separate marketing department. So that's really a whole of marketing. So that's strategy. It's digital marketing. So that's your web, your SEO, your social media posts, sales aids, sales mapping of the sales processes, sales aids, and so on, so far as salespeople, BDMs, and so on. We have an operations management team, so specialising in the operations of a business, so whether it be on construction sites, in wholesaling, transport businesses, the various operational issues there. We also have IT, process automation team, which automates manual processes, integrates software platforms, and so on as part of the process. And we have managed IT services as well. So, and we obviously are very strong on the financial side of it, because that is the key for us driving growth and driving turnaround of businesses. There are other departments within our team. On the board of our Philippines company, we've got 3 professors of accounting who've been with us for 10 years, and so on. So the team of about 35 people at the moment.
Thanks, Don. And can you explain a little bit about the 5 pillars of healthy business? Can you explain what that means? It seems to be a strategy that you use within the business. Yes,
this is something we're very focused on, everyone, is first of all, right numbers, deliberately right numbers before right people, because the right numbers can then actually tell you whether you've got right people in your business, right processes, the right business model, and then focus on strong growth. for us, a business is only going to be healthy if it scores at least 7 out of 10 on all 5 of those pillars. If it's an 8 on 4 of them and there's a 5 or a 6 on one, for us that's not that's not a healthy business, and we need to focus on that pillar that's letting the business down or holding it back from fulfilling its potential.
So I'm assuming this is something you do at the very beginning when you go in and meet the client for the first time.
Yes, well, we do a business review meeting when we first meet a client, which we don't charge for it. We obviously look at that side of things, but then it's the next slides I show what we really get into that, which comes down to right numbers.
And this is what we call the business transformation and the strategic levers for growth. Is that correct, Don?
Yes, that's right, Richard.
Next slide, please. Okay, waiting for the slide. Just while we're waiting for that slide, there we go. Just before we go in there, Don, I know you've done some work with some of my clients, and I know you were in there for a couple of hours. As you say, you do the work for free, the quick inspection of the business.
Yes.
And I found you've picked holes in the business straight away within a matter of an hour or two, and customers have only walked away from that. That due diligence you've done, appreciating the weaknesses they have. It's hard for a managing director to sit there and remember everything or do everything, and they think they're doing a good job. And it's always good to have another pair of eyes to walk in there and say, these are the holes we're seeing in your business. And often as a broker, etc., they don't want to be that person that tells them there's a weakness because they're scared of losing the client. So it's great to have a third party such as yourself step in there and point out the weaknesses within a business. Yes,
we don't actually like to point out the weaknesses as such, but rather to just reviews to where it's at. This is where you're at, but very, very clearly. And then after, by the time we finish, which the next couple of slides will demonstrate, that we're able to come up with a clear strategy of what transformation needs to happen to the business. So what we've got here is an example of hypothetical business. Last financial year just finished, sales of 50 million, cost of sales 35, gross profit of 15 million, overheads of 14 million, and $1 million profit. Now, we manage businesses in cents in the dollar or percentage of sales, but we like to call it cents in the dollar, which is very powerful. So we get away from looking at dollars and we focus on the business model. So if the owner of this business decides, right, I want to grow my profit from $1 million to $5.5 million. You'll see why on the next slide I've picked $5.5 million. And they maintain the same cost structure in cents in the dollar. They're going to have to grow their sales by 5.5 times, 550% to $275 million. That is a massive task, and it's going to take years to achieve, if ever. On the other hand, we can go to the next slide. Yes, we can go to there we are. So in this, the way we much prefer to work, we achieve the $5.5 million profit again. But so on the left-hand side, financial year 21, we've got exactly the same figures we had in the previous slide, with the 50 million sales, 35 million cost of sales, 15 million gross profit, 14 million net profit, 14 million overheads, and $1 million net profit. But what we do, first thing, is set a target net profit margin, which and we will never set anything less than 10 cents on the dollar. Simple reason is Coles and Woolworths, for example, massive volume, low margin business, they achieve 5 cents in the dollar. So any other business is a micro business compared with them. So why wouldn't you be looking at a minimum of 10 cents? It could be 12, it could be 15, it could be 20, and professional services can perhaps even get 30 cents. So the strategy here is, first of all, set the target equals 10 cents down the bottom to achieve a healthy business. The next thing is the gross profit. We always find we can grow the gross profit. So if we grow the gross profit from 30 cents in the dollar to 33 cents, which is a 10% increase, that means we've got 67 cents left for cost of sales, not 70. So it's only a 4% reduction in cost of sales to give us that 3 cents, but it forces us to drive operational excellence. And I've said about our operations team, we focus on driving operational excellence, KPIs and all the rest of it to be able to achieve that. In the next case study, we'll show how we got, in the case study, we'll show we've got far, far more improvement in gross profit than that. The next thing is how much can we reduce overheads? They can be darned hard to reduce when you've got fixed costs of rent and plant and equipment and so on. If you can just go back there, Richard. Oh, can you just go back with that slide, please? Yeah, that's right. Thank you. So we said here, well, okay, if we can reduce overheads by 10%, and normally we can do that, that's $12,650,000 instead of $14 million. But we've only got 23 cents in the dollar left for that. If we've got 10 cents in the dollar net profit and 33 cents in the dollar gross profit, so that has to be 23 cents.
So, Don, what you're saying here is it's not all about increasing your sales fivefold to get to the same figure of a profit of 5.5. It's understanding the numbers in each category of the balance sheet P&L to what is easier to tweak to get to that result you're looking for. Well,
yeah, and it starts with setting that target of 10 cents, yes. Knowing we can increase the gross profit, so being conservative when we start, so just saying a 10%, no 3 cents in the dollar. The overheads, and that means if the overheads are 12,650,000 and they are 23 cents in the dollar, that tells us what our sales need to be. And in this case, it's about 10% increase in sales to 55 million. And then you'll find that, lo and behold, you've got $55 million sales, 10% increase. Your cost of sales is 37. Your gross profit is now 18. Your overheads are about 12.5, and you've got 5.5 million net profit with only a 10% increase in sales, compared with the previous case where if you're going to maintain the same cost structure, you're going to go from 50 million to 200 and whatever it was, 275 million.
That's amazing, because there's very incremental changes when I look at the left side and the right side. I mean, you look at, say, sales are only increased 10%. The cost of sales are only moved it by 4%. Gross profit is where you're picking up, a 10% movement, and the overheads have been reduced only by, a bit over $1.5 million. And you end up with a 5.5 times net profit. That's fantastic. And this is what you do all the time with the clients.
Yeah, yes. I developed this model intuitively back in 1989.
Wow. And I know it's worked a lot, because you've referred me a lot of clients, and within a couple of years, they're paying us out because they're making a large profit. We'd like to keep them longer, but you're doing too good a job of what you're doing and getting them to pay out our debtor finance facility, which we'd like to try and keep longer. We could, but it's good news to have customers make such great profit.
And we apply this to every business. We do this in the first meeting, get the financials as they are, go through their current, set the targets, and from this we're able to set the strategy. So, okay, we're saying here what we've got to do, how are we going to take, then is how do we take 10% out of the overheads? How are we going to reduce the cost of sales by 4% to give us our extra 3 cents gross profit? And and how we're going to grow the sales. So it's a combination of manage overheads, operational excellence, and sales growth.
And Don, do you just set these targets and walk away, or are you stay involved with the business? How do you do this?
Oh, right. Well, that's the point. We don't just do the analysis and walk away unless a client decides, well, yes, I agree with this, but they want to still carry on their own way. But otherwise, we work with clients on 3, 6, or 12-month contracts where we meet with them on a well, to give you an example, we signed up a legal practice last week that was referred to us by an insolvency solicitor, major tax debt and obviously losing money. So we work with them at 2 meetings each week. It can be more in a larger business. It can be we'll do separate meetings with the operations team, the leaders in the operation team. In our operations team, we'll do a financial meeting with our management accounting people, and we'll do a sales meeting with the sales people and a weekly management meeting. So the bigger the client, it could be 4 meetings in the week, and we don't charge on an hourly basis. It's just included an annual fee, based on an annual fee, which is a percentage of sales, and typically somewhere between 1% and 3% of turnover, annual turnover, split into 52 equal weekly payments. So it's affordable for businesses of that size.
So you're not just talking to the managing director, you're actually talking to each business unit or each person in charge of each of the areas of the business.
Oh, absolutely. Absolutely, because it's a whole of business approach. We have to get in there and get those operations, that operational excellence there, to get that cost of sales down and the gross profit up. We have to get accurate reporting, so we've got right numbers to manage the business by, and we never see right numbers when we start.
Right.
We're very focused on very accurate monthly accrual accounting, or even weekly, rather than just what's spat out at the end of the year, or what happens to be put into the accounting system without any effort for accuracy and accruals and managing. Because we manage cents in the dollar, if the gross profit margin is jumping around one month to another, we know straight away there's not accurate accounting.
Right.
We can provide that outsourced accounting if people want it as well, but that's an add-on service.
Okay.
And we do have clients outsource their accounting to us.
Okay, Don, so how often do you recommend businesses and their advisors, such as brokers, should review their strategic levers with their customers? And I understand you have a case study you would like to share with the audience today. We actually got a couple, but because of time, we're probably going to limit it to one, but we'll send the information out to the audience today, where there'll be several case studies. The one I think you're talking about today is going to be on a transport company that needed both ScotPac funding, SME Growth Services, and an expertise in strategic planning. Would you mind giving us an insight of how you came to this, getting this client? Can we have some background into the client? How do they relate to our audience as the typical clients? What was the issues this client was facing? How did you come to find you? What strategies did you put in place to fix the issue? And finally, what actions were taken up by your client, and where are the results today? Please, Don.
Well, you want
a mouthful, but that's a...
Yeah, do you want in 2 minutes or 20? Okay. How we came across this client is rather interesting, actually, is that one of the director's sons contacted me early last year. He had grown up with our boys, so we knew them very well. But he didn't realise that we were really involved in the transformation like we are, and came to me so far as outsourcing their finance department, which was 10 staff, and to cut costs. And they were individuals. I had a look at the financials and I said, you're going to be in, you're looking at insolvency within, this is February, by June. And said we need to do a lot more than that. So directors, a few meetings with the directors, and they agreed. We signed an agreement February last year. So it's a $60 million national transport and warehousing company. You can see the notes there, what the key issues were. So the leadership, well, they were negative cash flow. It was they're on stop credit with some of their contractors and agents. So of course you can imagine if deliveries aren't happening because contractors and agents haven't been paid, you've got major service issues and losing clients and so on. It's not an industry that benefits from COVID. It's not in parcels and so on. There was weak leadership, or no real leader, and bleeding cash. So obviously going to go into liquidation. What we did was really, first of all, stop the bleeding, look to getting right numbers, accurate numbers. We very quickly saw that the warehousing part of the business was the quickest way to increase the utilisation there, was the quickest way to generate additional gross profit. Dropped some customers with negative margins. We moved to reporting by business unit, so we split the transport and the warehouse business into separate business units, separate profit and loss for them every week, and consolidated. We developed a whole lot of KPI reports. We intensive meetings, the weekly management meetings with the different parts of the business, focused on major loss areas. One was actually pallets. There were tens of thousands of pallets that were lost over the years, still paying hire for, and then to get them off hire required paying compensation, which was a 7-figure sum. And so weekly management meetings, monthly advisory board meetings, quarterly strategy update sessions, did strategy day, full day strategy day very early on, so far as their strengths and weaknesses, the competitor analysis and so on. The result of that is that the financials, overheads, for example, are down 8%. Warehouse revenue up 40% in the year. The gross profit increased from 16% to 24%, I think. It was a 68% increase in gross profit, in the gross profit margin. And it's been operational, a real building of leadership. We've been able to, and this is what we do with the turnaround and growth clients, is we provide a lot of leadership and actually bring people together. So we talked about opaque numbers. That's opaque numbers to the operations people and the management people. So only the finance people and the directors knew what was really going on. So we actually, some transparency, bring the team together, working to a team, and collaboration. Very important. A very highly performing team now. It's exciting working with them, hitting a lot of home runs. The gross cash flow from operations has transformed by over $3 million in the last 12 months, year on year. And I guess right now, we have the weekly P&L from last week, got that last night. And The cash generation, we've monitored cash generation very closely. Profitably, drive hard, but we monitor the cash flow generation. So the generation of cash from trading last week compared with the same week last year was up almost $250,000 for 1 week. You can multiply that out across a year and see what that does. The net profit margin has improved by 20 cents in the dollar compared with the same week last year.
Fantastic. So, Don, so I understand that you and I are now talking to this client together, and we're looking at providing some ScotPac solutions. So obviously through ScotPac, you mentioned earlier that there's 3 areas that we are looking to assist this client. One of the areas is obviously through our invoice finance facility, which is you can borrow against invoices. We have a full service confidential facility offer. We can protect against bad debts through our bad debt protection insurance. We have a live integration with our accounting software. Our software system can now talk to your client's software system. We can also provide trade finance, which increase international buying power. There's no lock-in contracts with our customers on trade line solutions. And we can fund up to 100% of the cost of the goods being imported from overseas for some customers. We can also offer this client an asset finance facilities for financing of equipment, machineries, trucks, trailers, etc. We can provide up to $1 million standalone equipment financing for customers, and we can fund for new or pre-owned assets, whether they're local or imported, and we can do sale and leasebacks. So Don, ScotPac's proud to be working with you and your team at SME Growth Services and our audience in identifying the right solutions to help this client and many more just like them. We just gave an example of some of the funding solution lines we can provide such customers, and our solutions extend to a vast more industries such as labour hire, or better known as recruitment. We can help customers in manufacturing. We mentioned transport in your case study there. We can deal with importers, wholesalers, exporters, just to name a few of the industries, but the industries are quite vast. So I would like to encourage the audience now to contact Don or myself. Our details are going to be attached on this presentation when we hand it out, and whether it's a strategic review solution or is it a growth problem, is it a restructuring of a business, is it a merger and acquisition, is it just wanting to remove property security from your current loans, or needing to fund importing or exporting of products. So please give Don or myself a call, visit our websites. Now, Don will not be organising the finance if you introduce your client to Don. Don is not doing that. That's still your responsibility to look after your customers' funding. But he can assist in the right type of loan may best suit the client. So he can guide you to help give some solutions in his vast experience of what loans would best probably suit your client if you don't think you know, if you haven't dealt with business customers before. So as Don said before, he works on a weekly retainer paid by the client and does not rely on commissions paid by the lender, as this remains with you, the broker or the advisor. We will have a copy of this recording available for the audience and upload this onto your YouTube and LinkedIn if you wish to watch it again or share it with your clients or business partners. So now I'll now invite the audience to any questions that you may have. I'll now click on the chat button, which has a slight delay. I apologise, everyone. I didn't realise, but everything takes a 30-second delay. Okay, so the first question is Rosalind Pierce. With equipment finance, can it be in overseas format, or does it need to be in Australian Aussie dollars invoiced? Rosalind, it needs to be in Australian dollars, but if your customer is importing goods from overseas, we can facilitate for our trade line in bringing the good from overseas to Australia first in a different currency, and once it arrives, we then would convert that currency into an Australian equipment finance chattel mortgage product. I hope that answers your question. Next one is from Martin Bailey. How do brokers get paid from the referral, Don? So do you pay the broker at all? If they
is this for me? Okay. Yes, we are able to do that. We are able to enter into referral arrangements and pay a commission.
Perfect. Anthony Cohen has a question. SME 75 million turnover or asset based?
75 million turnover.
Yeah. Do you work on turnover or asset base?
No, we work on turnover.
So it's based on turnover.
Yes.
Anthony, hope that answers your question. Next question, Martin Daly. Again, contact details for my local ScotPac rep in Melbourne. Yes, I can send that to you. If you go online to our website, it should mention that which BDMs are in your state, or I'm happy to get Alexander to send that through to you if you like, whichever's easier. Any other questions? No? Okay, I think we've gone a little bit overboard by some time. So I'd like to thank everybody for listening. There were some good questions and very good content, Don. Hopefully everyone got something out of it. Please reach out to us both if you have any further questions. As we said, we'll send you out a copy of the presentation. Do read it again. I know it was quite quick. There are more case studies you can see on our website at ScotPac. And Don, I'm sure you've got case studies that you can share with or find on your website as well.
Yeah.
Thank you, everyone, for listening. Thank you, Don.
Yeah.
And just before we close off, I'd like to thank Alexander, who was our marketing manager here, who controlled the panels in the background. She did a great, fantastic job, and a great shout out to you, Alexander and Jared from SME, for helping Don and I for putting this together. We appreciate it. Don?
Yeah, thank you very much, Richard. Thank you, everyone. Appreciate the opportunity to share with you and Richard. Obviously, very happy to chat with you over any situations you may have and you'd like a view on.
Thank you very much. Goodbye, everyone. Thanks for listening.
Bye.